Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello. Welcome to the regular video research from the ForexPeaceArmy.com. We'll continue talking about the situation on the euro currency. Start as usual from the daily time frame. Well, in general, on our weekly research, we said that since market is approaching to the significant area of resistance, that is weekly Fibonacci resistance area, probably market will see some barrier to continue move to the upside. It should be a struggle with this solid resistance, and some pullbacks could happen on the lower time frames. And on Friday, we suspect that probably market could show some pullback to some of that area. This is the Fib support 133.82.83. It's right here. Also, that is the previous swing high 133.25, and weekly pivot point for the current week is 133.77. So we have seen this pullback to the weekly pivot point yesterday. Also, you can see that this price action was inside trading session to that one, since the whole range of that trading day stands inside of the previous one. What we have on the daily time frame, that's the same pattern, A, B, C bottom. Market now has reached 618 extension and turns to some sideways price action. The 100% extension stands right here, closer to the upper border of the monthly solid resistance area 136.72. Also, you can see that level of overbought for the current trading session is 136.36. It's rather far from the current market, and the data suggests that probably market will not reach it during today's trading session. So on the daily time frame, there is not much new information that could lead us to invent something interesting in something new. Market just shows some standing some price actions, consolidation that looks like some kind of the pennant, okay, on the daily time frame. But the fact that market stands above the weekly pivot point and above the previous swing high just confirms that the overall sentiment on the market, the daily time frame, is bullish. Well, on the 4-hour time frame, first of all, that is now a pattern that we have discussed also on the weekly research. You can see that nice thrust. That was nice bread and butter trade. So you can see 1, 2, 3 closes below the green line. That is the 3x3 moving average, hitting the pivot point and nearest Fib support on the 4-hour time frame 133.74. So you can see, and starting the pullback to the upside. That is what is called the momentum. So market has some significant momentum prior to the retracement. Retracement has happened, and by this momentum, market is trying to continue move to the upside. What we could expect on the 4-hour time frame? First of all, take a look that 4-hour time frame trend is bearish. Here, I suspect only one possible scenario that probably could happen is the deeper retracement to the downside to the nearest daily Fib support, to that level 132.83. That is also, by the way, the confluence support on the 4-hour time frame. The previous swing high is 133.25. That swing, okay, also stands very close. That's it. And we could expect this scenario suggests that probably could happen ABCD retracement. A, B, C top, D point 133.18, very close to this confluence support area. And you can see this blue line, that's Jordan-Napley oscillator predictor. It shows the level of oversold, although I very rarely use that indicator on the intraday charts. But just to point here that the level of 4-hour time frame oversold stands precisely at the same area. So this is very small probability that market will break this area at the first touch. So probably market will reach it. What will happen next? Bullish environment suggests that it will be reasonable to see continuation to the upward move. But what will happen, difficult to predict. Anyway, this will be the significant area of support that we could treat and use for the potential entry on the long side of the market. Even if we will appear to be wrong and market will break it to the downside, it will hardly happen during the first touch. So if market will touch it for the first time, we could enter on the long side of the market. When the market will respect that area, we could move our stops to the break-even. In general, during today's trading session, moving stops to the break-even will be very significant, and you'll see why. Another environment, another scenario that could happen is that market just could continue move to the upside. In that case, we will not see the deep move to the downside. So how we could trade this double contradictive views on the market? If you have the bearish view, then probably you could try, this is hourly time frame, you can see the trend is bullish on the hourly time frame. So we have now daily and hourly time frame trends on the bullish side. So if you have the bearish view on the market and suggest that this ABCD move will happen, you could try to short from that level, because this is agreement with this pattern A, B, C bottom, 100% extension, complement of this ABCD pattern, right in the 618 resistance of that retracement swing on the 4-hour time frame. It's 134.42, 134.34. So you could try to short from that level. If market will continue move to the downside, and probably market will respect that level, since this significant area of resistance. When the market will start to respect it, move your stop to the break-even. Because if market will not proceed lower and then take out your area, then moving your stop to the break-even will let you to not lose your money, and you will have the clue that probably market will continue move to the upside, and it will be hardly happen ABCD move to the downside. If you have the bullish view on the market, then your level is right here. It's around 134.10, 134.11. This is the hourly confluence support. So it's also nice level to watch for. Why? Because since we said that probably market will respect that level by some retracement. If market has the bullish environment, it probably should not break to the downside this level of confluence support on the hourly time frame, and will continue move to the upside and break this level during the second touch. That's a bit sounds sophisticated, but it's very logical. So if market, since this is the solid area of support, market probably will respect it too. And when it will happen, you also could move your stop to the break-even. So if it will be the move to the downside by this greater ABCD move, then probably it will happen like that one. So market will hit it, start retracement, reach that level, will show some retracement, and continue move to the downside according to that ABCD move. Since that level is more solid than this one or that one, because this is the confluence support. And that level is solid because this is an agreement with the completement of the ABCD. In fact, we have the bearish Gartley's 222 pattern. That's initial swing, ABCD retracement, market could continue move to the downside. That's why during the trading session, moving stops to the break-even will be absolutely significant tool that we could apply in this contradictive scenario when we have no definite clues where market could follow in the nearest term. In that case, those who enter short right here, move your stop to the break-even, when it continue move to the downside, will be absolutely in safe situation when market will break that level and continue move to the downside. And bulls, if you will enter right from that area, you will probably have some retracement from that level that allows you to move your stop on the break-even, and that will save your money if market will continue move to the downside. So that is potentially a situation that could be traded as on the bullish side on the market as on the bearish. Just don't forget to apply the moving stop to the break-even, because very probable odds suggest that market should respect as that level, since that's a significant agreement, as that level, since this is the confluence support by some shallow retracement, but it probably should happen. If this will not happen, well, that's the risk. That's the risk, and in this case probably your stop will be triggered. But the trading is the probability issue, so probability tells that probably some respect, some pullback as from that level will happen, and we have to use this to move our stops to the break-even. So be careful. This is a bit a lot of nuances in the today trading situation of the potential retracement, but this is worth it to look at it and probably to trade it. If you trade on the daily time frame, then probably for you it's better to wait still for that ABCD move, or if this move will not happen, wait when the 4-hour time frame will shift on the bullish side of the market and use the nearest fib support level to enter in the continuation of the upward move. But be careful, if it will happen very close or inside that level above the 135.05, then probably it's better wait for the further development, since market will enter in the turbulence zone, if you could say that, because that is the area of resistance on weekly and monthly time frames, and it's very difficult to predict how market will behave in that area. But this is the fact that this is really solid area of resistance.